Good evening, everyone. Welcome to IQI Canada Evening Talk. My name is Yousaf Iqbal, country head for Juwai, IQI Canada. It's been a while since we have had our chief economist Shan Saeed because I know we both have been very busy on different assignments. Last time when I was there in KL, we did one of these market updates, and after that we probably did one more, and then we got a little bit more busier. So first of all, I'd like to welcome you, Shan, to IKEA Canada Evening Talks. Welcome, Shan. How are you doing?
Good morning from Kuala Lumpur. Thank you, Yusuf, for having me. And yes, it has been a while that we haven't spoken to each other. And I was wondering, where did Yusuf go? Where did he go? So finally, I think you are back and I'm back and happy to be back on in the studio for this talk with you.
Absolutely, Shan. You know what? I'll tell you what. Our viewers have really, really missed you. Because at Juwai IQI, we need to know what's going on around the world. Especially, we need to hear from our chief economist, Shan Saeed. You have been making waves everywhere. I see you on CNBC. I'm seeing you on all the newspapers and things like that. And again, for the people, followers who are following us right now, if you really want to know what's happening around the world, you need to go and follow Shan Saeed on LinkedIn and Facebook. He is on media every day and talking about different things on that. Thank you so much for that, Shan.
Thank you. It's a matter of prestige and honor to represent Juwai IQI not only in Malaysia but in global TV channels. As you know, I have entered into an agreement with CNBC Dubai and a shark business with Bloomberg. That is the local version of Bloomberg in Arabic for GCC market. So they have got into an agreement with me that every month I will appear once in a month on their TV channel. So I think I feel that it's a matter of prestige that Juwai IQI has got this honor to be on the global media, and I feel absolutely ecstatic.
Amazing, amazing. Thank you so much for that, Sean. So let's get down to business. I'm sure our audience would like to know. So many questions which we got right now. I'll try to cover a few of them wherever we can, and we'll keep for the next show on that. So first of all, first one, Sean. You've been making waves, especially in the oil market. As your forecast has hit the market. You said $83 to $127 per barrel, and right now the oil is trading about $85 per barrel. What a great call! And of course, you just mentioned about the CNBC Dubai and Ashraf business with Bloomberg, which I featured you in the show as well. I'm so happy that you're being featured in so many global media. What do you have to say? Please share your insights on this.
Thank you, Yusuf. Yusuf, at the start of the year, we mentioned in Malaysia to the local newspaper Star that oil prices are going to meander around 83 to $127 per barrel. And 2 months ago, oil prices were hovering around $70. And the press asked me that, Shan, are you going to change your call? I said no, because I have got market intelligence reconnaissance and we maintain our stance. So, if you recall, I have been sharing in Star newspaper. Yes, you have rightly pointed out. On 20th March, 10th May, and latest on 26th June, we mentioned that oil prices will stay in this range. And right now, when I speak, if you go to tradingeconomics.com, oil is trading at $86 per barrel. So, God has been kind to us that, investors, those sophisticated, smart, and well-informed investors who have been following Juwai IQI, they know everything is documented in IQI. It's based on facts and figures. No Cinderella stories, no James Bond stories, no tabloid stories. So people can always. The beauty of internet is you can go and counter check whether Shan Saeed, whether he made the right call or wrong call. If I made the right call, I give full credit to my network, people who are associated with me. If I make the wrong call, I said, yes, I have made the wrong call because I have learned this thing from a Nobel laureate professor when I was at University of Chicago. In front of 90 students, the Nobel laureate professor will say, oh, I apologize, I made a mistake. So who is Shan Saeed? I'm not a Nobel laureate, I'm just an laureate person. So if my Nobel laureate professor can say, I'm sorry, I apologize, I made a mistake. So if I make a wrong call, I also say, oh, I'm sorry, I made the wrong call. But I think my people in my networking are smarter than me, and I know them from my school days, more than 35, 36 years of friendship. So I know and I trust them that they will always share facts and figures. So oil prices will stay at this level. Uh, Goldman Sachs, UBS, and Bank of America and JP Morgan, they are saying that oil prices will hit $100 per barrel by December. We at Juwai IQI, we are saying, I've already shared on 27th July with CNBC Arabia in Dubai that oil prices will be trading at $100 per barrel by October. Based on the premise that production cuts from Saudi Arabia and Russia will continue beyond September, number one, US dollar will stay in a depreciating mode. So debasement of US dollar, because Fed is not going to increase interest rate because they are done with the interest rate. Inflation is coming down. That is one of the reasons that Fed will take a pause. Election is coming next November in 2024. So before election, historically speaking, Fed has never increased interest rate. So they won't increase interest rate. In fact, they will cut interest rate. And last week, if you read Wall Street Journal or Financial Times, Brazilian central bank has started cutting interest rate. And as you know, Brazil is a commodity-based country. So Brazil, which is like a neighbor in South America to US, I think the signals are very clear. Globally, central bank will start decreasing, cutting rates because they want to prop up the demand. Otherwise, there will be deep recession in many economies. So in order to boost consumption, in order to boost investment, they will cut down the interest rates. But at the same time, oil prices will go up. So those countries who are oil producing like Canada, Saudi Arabia, Russia, Malaysia for that matter, Qatar, UAE, all these oil producing countries will benefit, and they will benefit in the sense that the fiscal side of the balance sheet will get stronger and the government will have more money to boost the economy. So overall, I think we are quite buoyant on the oil price market, and we think that oil prices will continue to stay higher for the next 2 to 3 years.
Great, thank you so much for that, Shan. I know that I really appreciate what you said. When you make a call, whether it is right or wrong, but God has been kind, definitely. But your insights have always been there when you've been making calls on that. So thank you so much for that. My next question to you is that you worked on the endowment on raising funds for University of Chicago. Now, Howard Endowment is the largest and biggest in USA. Share your insights about the recent stock portfolio investment of Howard Management Company, which takes care of the endowment.
Yes, very important, Yusuf. Nowadays, most of the markets are driven by endowments, by pension funds, family offices, sovereign wealth fund. And as you rightly pointed out, Harvard endowment is one of the largest. I finished my school from University of Chicago, I used to raise funds, collecting money from people to contribute to University of Chicago. I still do, contribute to endowments. So what the Howard Endowment has done, they place their funds where most of the graduates from Harvard they are working. So they are right now focused on technology. So as you know, Facebook CEO Mark used to study at Harvard. So they are heavily focused. The stock portfolio is heavily focused on the technology stock, and I believe the technology stock will continue to make waves. AI is quite big, so some of these technology stocks supported by AI will make huge mark, and they will continue to drive the equity markets. So I think Harvard endowment, if you look at it, most of the endowments in US they follow the big endowments like Harvard, Princeton, Chicago, Columbia, Wharton, Stanford. So these endowments are big, and when they come into the market, everybody knows that they come for long term. They don't come for 1 or 2 months. They take position for 1 year, 2 years, 3 years, depending on their exit strategy and depending on their risk appetite. So I think equity market will stay up because once the interest rates go down, the cost of money will become cheaper. Once the cost of money becomes cheaper, companies will be encouraged to go for expansion. Once they go for expansion, the earnings will go up, the cash flows will continue to stay stronger, and that's how they will attract investors to come into the market again. So overall, I think Harvard Endowment has given direction that in equity markets, technology stocks, in my opinion, energy stock and healthcare stock will remain quite favorable, along with FMCG, fast-moving consumer goods like Unilever's, P&G, Colgate. They will stay much stronger. So overall, I think the Harvard Endowment has given direction to the market, and those sophisticated, smart investors can take a lot of insight from this stock market portfolio of Harvard Endowment.
Amazing, amazing. To people who joined us just right now, we are live with Shan Saeed, our chief economist from Juwai IQI, all the way from Malaysia. Shan is being featured in a lot of Bloomberg newspapers. Right now, he's been doing on CNBC. If you want to catch up Shan, please follow him on LinkedIn and follow him on Facebook. So Shan, bring me to my next question. Warren Buffett cash holdings have goes up by 147 billion, reported in Financial Times, dated August 6, 2023. And I still remember when we did our show in February 2021, how time flies. That's February 2021, we're in August 2023 right now. We were deliberating upon if Warren Buffett would increase his cash holding. He did so. We were ahead of the game. Your insights on this, please.
Yes, I vividly remember in February 2021, we did this show, Canadian Market Outlook, and we were talking that Warren Buffett is holding 130 billion, 130 billion. And right now it is $147 billion of cash reserve. If you recall, Yousaf, I shared with you on 2nd November 2019, Financial Times newspaper, Warren Buffett was holding 128 billion, 128 billion dollars of cash flows. That was November 2019. And now we are sitting in August 2023. So 128 billion to 147 billion, it's a straight 14% increase in 4 years. So that clearly shows because cash gives you financial empowerment. So again, those sophisticated and smart investors who have got cash, like they enter into the Canadian real estate market, if they are holding on to cash, I mean, they can make strategic position. They can take strategic position in those asset classes which has got high value, where upside is very favorable. So your job has become very important in the sense that people who are landing in Canada and they are coming with $1 million or $2 million of cash, you can always give them strategic advice on trophy investment opportunities with higher upside, and how with cash they can have the bargaining chip. They have the power to negotiate and to take position in those real estate assets which will give them higher value in the long run. So I think yes, we have been quite spot on that what we have shared, it's coming back into the market. It's repeating. It's repeating. Cash holding, we have been saying, real estate is the new global currency. Gold and silver is your wealth protection. Arts is good during turbulent times. Agriculture is a basic human needs, and oil and gas is important for your life. So I think all these basic things, they are coming back. So when people land in Canada, the first thing that they need is housing. Even if they've got $2 million or $5 million of cash, they need housing somewhere. So I think cash is important. It has become a new asset class. So you as a country manager and your team can, look for those people. And I have also requested you to meet Tariq in Canada. He's a good friend, and I think Tariq could be very helpful in getting you connected. And I know that you are very good at networking with people, and your networking is very strong in Toronto, in Calgary, in Cambridge. So all over, Yousaf is there in Canada, and people respect you for your insights. So that is, I would say, God has been kind to you that people respect for your number one, for your credibility, for your integrity, and for your morality, because you're very straightforward and you share facts and figures. So for those investors who are looking at long term and who are looking for facts and figures, they appreciate you that Yousaf is not sharing Cinderella stories. You have the data, you have the interpretation, and you have the source document and you give them the forward guidance what they should be looking for.
Thank you so much, Sean, for your kind words. Yes, God has been really kind to me for that reason. I mean, today we were just sharing with our team as well about the outlook of the Canadian real estate market. Some of the very interesting facts which you mentioned right now, that the population or the people, Canada just cost 40 million people, and then we are getting about close to 500,000 people every year who are coming in, and the number of houses are not being made as quickly as the way people are coming in. So right now, also even with the interest rates, which I'll come to that point later on, but the real estate market still stays very strong because there's still a lot of demand and the supply is low. The rental market is going out crazy, and I really like what you said. The real estate being a global currency reminds me of the book which you had written in 2015 or 16 when I met
15.
Shan Saeed. He said, "Here's 13, right?" But I met you in 2015. He said, "This is my book, Yousaf. Go read it out there on there." It's so amazing that it still stands out, and I'm sure it's going to continue to stand out in future as well. So thank you so much for all your insights as well on that. So, Sean, my next question to you is, of course, the interest rate factor, which is right now in everybody's mind. Interest rates are going up. Where does it really stop? How are central banks are making their calls? I mean, Sean, this has a big, conundrum on for many sophisticated, smart, and well-informed investors. Now, Wall Street Journal reported the news on August 7, 2023. So what are we looking at in terms of this interest rate?
Yes, Yusuf, this has become a burning question. As you pointed out, it has become a new conundrum. I mean, people are confused and they want to take position, but they are confused when will these central banks stop increasing rates? I have already shared in 2022, and I still maintain my stance that interest rates will eventually come down, and they will come down much faster. Yes, investors bet rates will go up. No, rates will come down. I don't see interest rate. I'm a contrarian. Yes, I've read Wall Street Journal and Financial Times and Economist magazine, everything, but I follow my networking. So people in my networking, mostly 90% are contrarian. We don't follow the mainstream media, although we follow mainstream media, but we make our own calls based on data, based on macro analysis, and most importantly, based on monetary policy landscape. What is happening globally? So I think interest rates have gone up too far, too soon. Central banks are panicking. Demand is slowing down, especially consumption. So in order to bring up the demand, because if you look at the GDP equation, you have four variables. You have consumption, you have investment, government, and net of export. Consumption and investment, the two most important variables in the GDP equation, they actually give forward guidance to government and net of export. So I think consumption will go up once the interest rates will go down, and that is where investors will have a very favorable position to take position in many asset classes. So people are talking about interest rate will go down by Fed or ECB or Bank of England by June 2024. I don't see that happening in that far. Maybe by Q1 2024 or maybe by December this year. By Q4 December 2023, we expect interest rate might go down because in order to encourage demand, in order to have favorable position in the economy, in order to boost the economy, I think interest rates will go down. Yes, I have read this piece in Wall Street Journal. Investors are still thinking that inflation, due to staying higher, the central bank will raise rates. But right now, interest rates have come down. The inflation has come down too much. From 7 to 8% is now hovering between 2 and 3%. So inflation is still under control. The central banks have did manage to bring it down to a level where they can, support the economy. They can support consumption. In order to support consumption, you have to cut down the rates. And once you cut down the rates, the consumption pattern keeps on rising, and that's where the economy gains momentum, and that's how the asset classes they go on the upsurge. So I think, in my opinion, I'm still sticking to my call. Interest rates will come down. Whether I'm right or wrong, that is besides the point. but eventually central banks will cut interest rate because global economy can't take the pressure of higher interest rates. Asset classes, they can't take the pressure of higher interest rates. Investors, they get worried when interest rates are high. I, as an economist, believe that interest rates should be based on market-driven approach. It should be based on what the markets and what the data are actually sharing the forward guidance to those policymakers. It should be at a level where they should support the economy, they should support consumption, and overall they should boost investment. Those are the two main variables that can drive GDP growth rate and give forward guidance to many investors globally.
Amazing. I really appreciate what you've just now said of that for the interest rate. I think that's the biggest question people are having in mind. You rightly pointed out the inflation has gone down, and I believe also that right now people who are sitting on the edge right now because of the interest rate, because that's just a sort of uncertainty people have, especially because their mortgages from 1.8% has now gone to almost like 7%, and that's where people are a bit hesitant with which we're seeing right now. That having said that, we still see the demand and supply still going on. I think the good news, and keeping fingers crossed, your call is good that we need to see this interest rates really coming down on that, because one thing which we saw in the month of February and March, especially talk about Canada real estate, that when the interest rate was not down but was just stable enough that it was not going up, all of a sudden we could see the hike going up again in the month of March and April, and people were again going in, multiple offers coming along on that. Obviously, the two interest rate hikes have taken in Canada real estate market right now. It has slowed down, but it has not. And the amazing thing is that the prices have not gone down. We always talk about this to our team as well. Yes, interest rates are a factor, but then the pricing has not gone down. So let's keep our fingers crossed, and let's hear the good news. I'm sure when we are doing it every month, this show, when we will quote ourselves again, and on August, on August 8th, 2023, we were talking about the interest rate, and now look at what the interest rates are going up on that. So thank you for that, Shan.
Can I say something? Can I say
Please,
something?
please.
Tomorrow I am on Ashwag Business with Bloomberg. That is a local version of Bloomberg
Yeah.
in GCC. And tomorrow I am talking about stabilization of interest rates. What do I actually mean by stabilization of interest rate? That eventually interest rates will come down, and it will be based on market driven approach. So central banks will realize that we need to cut interest rate. So once they cut interest rate, that is going to stabilize the economy. That will bring some stability. So stabilization of interest rates are very important for those global investors. So tomorrow at 12:35, I'll be taking a live call sitting in KL. So from KL to Dubai in 15 minutes. It's the quickest airplane that you can have on this earth. I will take the interview in 15 minutes and then come back to KL. So tomorrow
We'll
I'm
be looking
talking
forward
about
to hear for you. Yeah.
so tomorrow I'm talking about stabilization of interest rates will eventually happen by end of this year or early next year.
Amazing. And we look forward to hearing for you on that for sure. So again, people have joined us. Do follow Shan Saeed on LinkedIn and Facebook if you really want to know and keep yourself in what's going on around the world in economies. So Shan, to my final question, there's list of more other questions which we'll catch you for next time. But my final question for this show is that let's talk about the Canadian real estate market, which is softening, and investors are waiting, as I told you, because the interest is to come down. However, there's, as I said, there's still a very strong market about the Canadian real estate. Please share your insights on that. I'm saying it because I'm in Canada, but I would like to hear from you because you are looking at it from a macro level.
June 2021, Economist magazine. If you have invested $100 in Canadian real estate market, sorry, 2001, $100 in Canadian real estate market. By 2021, that $100 has become $325. So that gives you a forward guidance that despite hiccups, despite interest rates going up, Canadian's real estate market has attracted those sophisticated investors who understand macroeconomics, who understand global trends, who understands stability of Canada, who understands, what is the value that Canadian real estate market brings to their portfolio. So, despite interest rates are very high in Canada and US, I am bullish on Canadian real estate market because Canadian real estate market is brings stability to your portfolio. So for those investors who are looking for stability in their asset portfolio, they need to have Canadian real estate market. Moreover, you just mentioned that people are sitting on the fences right now. They are holding on to the cash and they are waiting interest rates to come down. Once they will come down, I can assure you that there will be a lot of rush to your office in Canada and people will be lining up. And as you have been talking to me, that on one and single listing, there have been 42 bids, 50 bids,
Yeah.
and the bids are getting higher and higher. So I think that will eventually happen. So those people, those sophisticated and smart and well-informed investors, they already know that interest rates are going to stabilize. Once the interest rates are going to stabilize, they will come back in the market and they will come back very strongly. So your job as a country manager is to keep on, engaging with those investors, sharing your insights, share our newsletter to all those investors so that they know that Yousaf is there for us and Yousaf have been giving us the market intelligence report at the right time. I strongly believe that once the markets are softening, it's your job to stay in the market. Do not leave the market and stay engaged with those investors. Once you stay engaged, you will capture the mind share. Once you capture the mind share, the market share will automatically come back. Once the markets are going to stabilize, he will remember Yousaf Iqbal have been sharing this newsletter and they have been sharing markets insight. Let's talk to Yousaf. So engagement strategy with those sophisticated and smart investors who are looking for long-term values, I think it's very important to have continuous communication with them. And once you have continuous communication with them, they will always remember you. Do not leave the market. So staying in the market is very important. A lot of people they say, "Oh, the markets are softening. Let's take a break for 6 months." I think that is an opportunity for 6 months that you continuously stay engaged with those investors, and you bring insights. And once you stay engaged with them, they will remember you. So I think for brand building exercise, for having a strong credibility and integrity in the market, it's very important that those investors they should know that Juwai IQI they have been keeping us ahead of the game. So my insight is this that Canadian real estate market will continue to go up. We have been talking to each other for quite some time. You have been sharing with me that immigrants every day they are coming to Canada. Every day. 1.2 million people are expected in the next 3 years. So where would those 1.2 million people go? The demand is here. Supply is not keeping pace with demand. So eventually the prices, whether it's rental or whether it's ownership of those assets, the prices will continue to go up. Whether the interest rates go up, whether interest rates will go down, those investors they want to buy property, they will buy property.
Thank you so much, Shan. You rightly said. I'm so happy to hear that. So, all our viewers, I mean, just don't go what I'm saying. You're hearing it right from our chief economist, Shan Saeed, from Juwai IQI, who is not only just looking at the Canadian real estate market, but is looking at the overall picture of the world's economies as well. And as Shan has rightly mentioned, this is what we are experiencing as a team as well. That right now, keeping engaged with our clients, and that's what exactly our team is doing right now, and that's where IQI, globally and Canada team comes along is that because we work as a trusted advisors, and Sean, thank you so much for that. Sean, anything else you want to say before we say bye to our audience? I know there are a lot of questions, but I'd like to continue for next time. Anything you want to add before we say bye to our audience, please?
I would like to address all those investors who are sitting in Canada that, Honorable Sir, give Juwai IQI an opportunity. You will never be disappointed because our team is very smart. They are on the ground. They have got market intelligence report. They have got data. But most importantly, they are there for you so that you make money. You make money not only in the short run, but also in the long run. And as we share in IQI, real estate has become the new global currency. So give us an opportunity and always ask yourself, do you want peace of mind or do you want sleepless nights? If you want peace of mind, take position in tangible asset. Take position in real estate, gold, silver, arts. So you will never go wrong. Thank you so much, sir, for giving IQI an opportunity, and good luck to you, Yusuf.
Thank you so much, Shan. So, people who were with us, we were live with Shan Saeed, our chief economist for Juwai, IQI. Please follow Shan on LinkedIn and on Facebook so you can, find out what's going on in the world economy. Thank you so much with that, Shan. Take care, and we'll talk to you guys soon. Take care. Bye bye.